So starting with myself, my name is Katie Kelly. I'm a Senior Director here at ICMA, and I provide Secretariat services to the ICMA Commercial Paper and Certificates of Deposit Committee, otherwise known as the CPC. I also look after our issuer community at ICMA, so that's financial institutions, corporates, and those from the SSA community. It's great to be participating on this webinar today to discuss the work that a small number of us from the CPC have been undertaking on sustainable commercial paper. So I'm just going to ask my co-speakers to introduce themselves very briefly before we get into any further detail. And I'm going to go around the screen as I can see it. So Giovanni, could I come to you first?
Yeah, Katie. Good morning, everyone. I'm Giovanni Nero, and I'm the head of Capital Markets, Development Finance, and ECA Financing at Enna Group. Nice to meet you.
Thanks, Giovanni. Across my screen, Arthur, you're next.
Thanks, Katie. Look forward to today's discussion. Arthur Krebers. I work in NatWest in our climate and ESG capital markets team, supporting corporate customers in embedding sustainability into their treasury and financing strategies.
Thank you, Arthur. And Geeta, can I turn to you, please?
Yes, thanks, Katie. Hello to everyone on the call. It's Geeta Sharma here from BlackRock. I am a lead portfolio manager at BlackRock, but also a global head of our sustainable cash investments as well.
Lovely. Thanks, everybody. Thanks to the three of you for joining this discussion today. So everybody who is on the webinar probably knows that we released this paper, which is being blurred currently, sorry. We released a paper in October 2024 on the role of commercial paper in the sustainable finance market. Now, the reason that we did this was that we saw some activity happening on sustainable commercial paper, and we decided that, as we do, it would be an opportune moment and a good time to put some discipline around the product as it develops. At the time of the release, or maybe just before, we had seen around 33 sustainable CP programs. That's not including some domestic programs, which we discounted for these purposes. And of these 33, 23 were use of proceeds CP programs, and 10 were sustainability-linked CP programs, which I'll discuss in a wee bit more detail. And one of the challenges that we had actually was in identifying the programs in the first place, which I think is a challenge with commercial paper more generally, and is something that we might touch upon later in the webinar. But back to the paper. I mean, at ICMA, we don't create the market. We track market developments, and then we try to form consensus around those developments so that we can come up with viable frameworks which will help guide future practice and hopefully ensure some scalability. So when it came to sustainable CP, we put together a task force comprised of a very broad range of members from our commercial paper community. So we had members from the buy side, we had members from the dealer community, and we had a number of active issuers who are issuing sustainable CP to help us study the market and come up with our best practice. And based on what we saw, we came up with the two high-level categorizations that I've just mentioned. First of all, use of proceeds CP, and we define that as where the net proceeds are exclusively applied towards financing or refinancing eligible green, social, or sustainable projects or activities as defined in and in alignment with an issuer's sustainable financing framework. And the second high-level categorization we found was sustainability-linked CP, which is commercial paper linked to an issuer's performance based on sustainability KPIs or ESG ratings and scores, which are again consistent with the issuer's sustainability-linked financing framework or strategy. So the approach we took was very pragmatic and market-friendly, we think, leaning on the well-established principles already in the green bond and the sustainability-linked bond principles. What we came up with doesn't necessarily deviate from current market practice that we saw, but instead we took that as a starting point and developed it with the assistance of the task force members. And what you'll find then in the paper is initial recommendations for use of proceeds CP and observations for sustainability linked CP, which we did to allow the sustainability-linked CP market to develop further. Because remember, I said there were only 10 programs at the time, 7 of which are KPI linked and 3 of which were ESG linked. So that's not a huge number for us to have gone on. But first of all, maybe turning to you, Arthur, and with all that sort of background context for our audience, do you want to just give any thoughts on why we did it and the evolution of the market generally?
Yeah, happy to. And as you've described, we've seen this trend both amongst issuers and amongst investors to expand their sustainable finance strategy beyond, the term debt to the bond market. So on the issuer side, it's increasingly common to not issue a bond framework, but a sustainable finance framework that has applicability across, in many cases, the capital structure, including commercial paper. And indeed, on the investment side, we've seen quite significant growth in the range of portfolio strategies within money markets that focus on sustainability. So we've seen that expansion into the money markets, into the CP product category, both on the issuer side and on the investor side. And it was felt that the existing suite of principles, of guidelines that ICMA has on offer would merit expanding to explore some of the nuances of the commercial paper, product and market when compared to the bond market.
Yes, thanks. So the experience of the task force that we had showed that even though there's a decent number of programs to go on, consensus around sustainable CP wasn't always easy to reach. But I feel like there was one area where there was a lot of agreement, and that was around transparency and communication. And a lot of that discussion came from the investor community. Geeta, do you have any thoughts about how that worked out?
Yeah, I think it's true to say that, generally speaking, investors that are interested in sustainability and taking that a step further, actually investing in securities that may be linked to sustainability directly, definitely feel that they want to have a level of transparency around what it is that they're sort of investing in, and also being able to refer to it, report on it, have that linkage with on an ongoing basis the projects that they may be investing into. And I think it became very clear through the discussions with the group that regardless of the structure type, it's really important that there is that transparency element with anything, and whether that means in terms of front running with the type of projects that the proceeds are being used by, if you're looking at use of proceeds, or if if it's other objectives, what they are, and setting those out clearly at the very beginning. And I think that was definitely something that whether you're an issuer, a market participant, or investor, everybody seems similarly aligned on that basis.
Thanks, Geeta. Giovanni, if I may, turning to you before we get into the specifics of each of the different categorizations, why do you think this, and you as a prolific user of the sustainability linked product, why do you think this market has developed as it has? And are you seeing particular benefits or challenges that you'd like to highlight?
So clearly, when it comes to a sustainability link approach, which could be tied to our commercial paper strategy, main difficulty that may arise is the fact that there is this structural misalignment between the natural essence of commercial papers and, let's say, the scope and time frame of targets and KPIs that we may establish as an issuer, right? So I think from our perspective, these fits well in a broader financial strategy, which in its complex could be tied to sustainability targets and KPIs. Therefore, despite not having any sort of financial penalty, as it happens with bonds and loans, as it's not possible structurally, at least for the time being, I think there is strong reputational issue that may arise in case you are not able to achieve this target. That could be, let's say, in the very end, also put at risk your reputation in the commercial paper space.
Yeah. We might get into that in a wee bit more detail, Giovanni, because I know that is a really big issue for the likes of NL and other issues. But when it comes to things, for instance, like can you recognize a green EM? Has it helped with your investor diversification, etc., to be in this space as well as elsewhere in sustainable finance?
So when it comes to financial implication, particularly greeniums, I think differently from long-term debt issuance, it seems difficult to me to clearly identify greenium in the commercial paper space. Even though, and nonetheless, I think it continues to, let's say, to reinforce and enhance the message of an overall financial strategy tied to sustainability that can be identified also in the commercial paper space. So in terms of investor base, this could be amplified by the use of some such sort of approach.
Arthur, I can see you nodding along here. Have you anything to add to echo Giovanni's comments? Or
well, certainly to echo Giovanni's comments. I know there are some cases where issuers have posted, ESG and non-ESG CP levels. There'll be a very small delta, maybe a basis point between them. But I would agree that the most consistent, positive benefit that issuers have experienced is a broadening of their investor base, which can be particularly meaningful for sectors or for certain sort of rated issuers that would otherwise perhaps not be able to tap into as many money managers. So it opens doors, which I think is actually quite valuable if you think about the commercial paper market as really being the lifeblood in many ways for the treasury operations, right? It keeps things going, really important source of liquidity. So I think that's helpful, and certainly the feedback we get from investors, and we welcome Gita's views here, but that it still remains very undersupplied, right? Investors would love to see a broadening diversification of the sustainability labeled commercial paper market.
Arthur, do you see, and Giovanni, do you see like new investors coming in who previously wouldn't have even been into investing in commercial paper? I mean, is it a noted difference?
We've certainly seen that amongst the fastest growing sustainable fixed income strategies. If you look at the fastest growing ones, quite a high proportion of those are money market strategies, and when you speak to them, they're certainly getting more questions from their end clients, which of course also includes a lot of treasuries with sort of excess cash around the sort of ESG integration. And then back to Gita's point, it's important to be very transparent there and to be very robust there. It cannot just be exclusion of one or two sectors that already don't really access the CP market. It has to be quite well thought through. And for a number of these strategies, certainly the impact ones, but even the sort of ESG integration strategies, having labeled commercial paper could be quite a valuable flagship holding and quite a valuable asset class to be long vis-a-vis for such strategies. So I wouldn't necessarily say it's necessarily changing investors' duration preferences, i.e. bringing more investors into the CP market, but I would say there's a conversion of money market strategies to embrace all the different types of ESG strategies that we've gone, that we know from the term debt market.
Mm-hmm.
And this time it is my turn to echo what Arthur is just saying, right? So I think it's again, this sort of approach again reinforces the fact that investors, not only fixed income investors, but also money market funds, are clearly interested more and more in what is the underlying sustainability strategy of the issuer. And if these can be played also through commercial papers, I think it's worth investing in such a product, I would say. So totally agree with what Arthur just said.
Gita, at this point, I think it's a natural segue into you. So for the investor community, what's the appeal and the motivation for let's start with the use of proceeds piece first, use of proceeds CP. And in that sense, what do you think good looks like in terms of its design?
So definitely true. I think that most of the investors in these types of issuances are existing money market investors, and we have seen not only a rise in money market funds that have sustainability commitments of some sort, but I think also it's an exciting opportunity. If you have been following this the sustainability market and seeing the growth of the green bond market, then it's great that we're also seeing expansion of opportunity to other areas of financing, and in particular the front end, the short end of the issuance opportunity. From a investor standpoint, we were very much drawn more to the use of proceeds structures, because we felt that the transparency there really was helpful. So typically those investments are very clearly earmarked for projects at the very outset. So if you're an investor who wants to think about the spectrum of impact of the projects that you maybe helping to finance, it enables you to really think through sort of where on the scale that impact can be, and make a choice around that, because often this is driven by client choice ultimately. And I think that we also typically see them linked to broader sustainability frameworks as well, all in keeping with the idea of what does good look like. I think we found that it's helpful not only for investors but also for issuers, because they might have already very established sustainability financing frameworks, and so to leverage that and include short-term issuances into that can be a big lift for them on their side when you think about reporting and governance and all the rest that comes with this. So those are the sort of key things. I think the transparency of what the projects are, the linkages to frameworks has been very helpful. We also have been encouraging and have seen a lot of issuers very clearly label the issuances that they are bringing to market, whether that's through their own websites where they are detailing their frameworks, but also on venues such as Bloomberg that investors may be looking to. There are some sustainability flags that can be added to these issuances, and a lot of issuers are adding these, and this is much more helpful to really distinguish the practices. I would say that in terms of the challenge for which has given us the motivation to be more interested in use of proceeds type of structures, is because the nature of CP market is that the issuances are fairly short term, whereas the projects tend to be quite long tailed. And so that mismatch potentially has enabled us to at least have the a level of transparency around over a tenor that's aligned with the issuance, by having the assets segregated deliberately for sustainability purposes. And that's the reason why I think the market also has leaned into that, and this, as you've pointed out in the paper as well, highlights that that is the majority of issuance is coming in use of proceeds format. But I think it does come down to choice ultimately, and I think so long as there is very clear sort of objectives, they are reported on. We are also seeing, similar to the green bonds and other longer term sustainability linked or sustainability issuances, they are usages of independent second party opinions, which helps sort of ratify that the framework is strong and aligns with the principles that the green bond principles, for example, are very much embedded into the framework in which these are being brought to market. So I think there is a few things there. It does require a little bit of work, and as it will with any sustainability issuance. But I think we see the big advantage coming from the broader sustainability frameworks and the linkage to that as being a real added feature for this marketplace.
Thanks, Gita. Arthur, if I can now turn to you and just looking back to the paper, which again is probably blurred, with respect to the use of proceeds piece, how has the kind of pragmatic and market-friendly approach manifested itself in the actual guidelines? If you wouldn't mind just describing that.
Yeah, no, happy to. And as you've alluded to, and Gita as well, there is probably more consensus in the market around application of use of proceeds technology to the commercial paper product. So I think we already started from a place when we did the market survey about a year and a half ago, where there were a number of points where we got quite clear feedback from the buy and the sell side. I mean, the one that comes to mind is around frequency of reporting. We put out the question there around how often would you like to get a use of proceeds allocation and impact report if the portfolio includes CP, and actually the majority view was once a year is fine. And to Gita's point, that then allows an issuer to embed the CP reporting with the bond, with the other liabilities as well. So I think that's pragmatic. It's also very transparent because you're then dealing with any sort of double counting issues by clearly segmenting what projects are allocated to which part of your use of proceeds or green or sustainable capital structure. So I think that's helpful. I think it's fair to say that the area where we did have a healthy discussion, and indeed with the more pragmatic route, was around the types of cash flows that you can peg to green or use of proceeds commercial paper. And what you'll see in the ICMA paper is that there is quite a bit of flexibility there. It is not just OPEX, it can be CAPEX, asset value, R&D, etc. Recognizing that different issuers will utilize the commercial paper market in different ways, and there'll be situations where a CP is a bridge to a bond, so hence for CAPEX or asset value, it makes sense. There'll be cases where CP gets rolled quite a long time, so effectively almost becomes a term instrument. So we didn't want to sort of force feed a particular use case that didn't align with how a treasury was already deploying the commercial paper product.
Yes, absolutely. I think we spent, as you mentioned, a good bit of time making sure that we weren't being unnecessarily restrictive, because commercial paper is a very widely used and very flexible funding tool, as you say. Turning now then to sustainability-linked CP, and Giovanni, you won't see this, but I'm looking at you. Can you talk us through, we know NL is very much a pioneer in the sustainability-linked space. Can you talk us through your position and your overall strategy with respect to sustainable financing? And I'm guessing this is not just confined to commercial paper, but elsewhere.
Well, absolutely, that's correct. So when it comes to us, you know that we have a rolling strategy which every year is presented typically in November to the capital markets. So every year we update our targets, our sustainability targets, and therefore what happens next, and typically in the window of December, January, February, we publish this all-encompassing framework, sustainability-linked financing framework, which basically is extended beyond bonds, but also covers loans, guarantees, derivatives, and also commercial papers. What happens here? So basically we have 5 KPIs. 3 of these 5 KPIs are tied to our decarbonization trajectory with different scope of greenhouse gas emissions. The 4th KPI is related to our renewable capacity, and the 5th KPI is tied to our CAPEX that are aligned to the European taxonomy. So we basically have established clear KPIs and targets that every year are refreshed in light of the new strategic plan presented to investors in order to be on the same page when it comes to, let's say, the business strategy and the financial strategy. So it is no mystery that we therefore every December work on the update of the framework. In particular, let me say that this year is being, despite the fact that you mentioned, right, together with Arthur, that the paper issued by the ICMA is not that prescriptive prescriptive, but the approach was more, I would say, broad enough to guarantee the needed flexibility in respect to this, let's say, innovation brought to the market. But it has an effect. It affects the moment in which you have a confrontation with the second party opinion provider in respect to the approach adopted in your framework. And basically, this is the very first year in which the second party opinion provider can verify that your approach is aligned with the paper issued by ICMA as a reference. So I think it's important to let's say, to show that to the market, to investors, that you are basically following the state-of-the-art technology in respect of commercial paper, but also other long-term instruments. So my first suggestion here is this paper, you have to follow it in order to, let's say, maintain best practices vis-a-vis your approach towards sustainable finance. Again, as I said before, to us, sustainable finance is more about the credibility credentials of the issuer in respect to sustainability. So I think when it comes to commercial paper, it is important for us not to have a standalone approach when it comes to sustainability and commercial paper, but it's important that you have it inserted into a broader scope of your overall financial approach tied to sustainability-linked targets.
So a much more holistic approach, looking through to the issue, etc. But with respect to the CP and the short-term element of CP, have you had difficulty in trying to calibrate your, by definition and of necessity, longer-term targets and KPIs to the short-term nature of the funding?
So basically what we have in front of us is a set of targets that starts from next year until 2040. Okay, so for each KPI, we have 5 targets which cover the next 3 years. Then there is 2030 milestone and 2040 milestone. So the shortest targets are being embedded into our commercial paper program. That said, clearly this is not enough to guarantee a perfect match between what is the typical duration of a commercial paper, typically 90 days, right? Under 80 days. And the target. But again, this is what say could be done for the time being, also in respect to, as I said, to financial penalty, that we try to think how to replicate this approach to commercial paper. But there is the structural element which is tied to the asset class, which is basically the fact that commercial paper is basically an auction every time you get into the market. So it's very tough to identify a potential premium in respect of of the fact that these commercial paper are tied to sustainability. And again, this the answer is integrate sustainability. For our suggestion is, if you want to adopt a sustainability linked strategy also tied to commercial paper, I think you have to put credibility first. Then you have to put to cover long-term financial instrument tied to sustainability targets, and then also extend once you establish this well-recognized message, then extend also this approach to commercial papers.
Yeah, so just focusing on this bit for the moment, and I think this is far and away the most difficult, academically challenging part of sustainability-linked CP for market participants is, first of all, the calibration of the targets to the duration of paper, but also the challenges with the penalty mechanism when you miss targets. Or Arthur, could you talk us through what those challenges are and why it means you can't really have the standard penalty mechanism that you would see elsewhere, like in sustainability-linked bonds, and also whether you expect to see any innovation taking place there?
Absolutely, and Giovanni has touched on this already. The obvious one is the timing mismatch, not only vis-a-vis the actual then target, which typically is at least a 12-month target, but then vis-a-vis the actual reporting, right, on the target, which is a few months later. So that then will likely not match with the tenor of the CP issued, and there's a number of other nuances around how the CP is distributed, which isn't always as which of course is different to how bonds are syndicated, held, and traded as well. So indeed, the working group was quite clear that you cannot replicate the common sort of coupon step up or redemption premium technology structures for those reasons to the CP market. And in terms of how to then resolve this need to have a penalty, a stick inherent in the structure, we've so far seen really two type sustainability linked commercial paper. The one we've seen, which as Giovanni has described as has been an L's approach, is broadly reputationally driven, where it's a bit of a naming and shaming. If you don't meet the target, you need to publish that, and that of course has an impact, likely on depending on context, but likely on your credibility with those CP investors, who by the way, those underlying fund managers may also hold some of your bonds, so that there's a potential sort of spill over there as well. So there's a reputational element, and then the other structure that tries to include some sort of financial implication does so not by returning that cash to the investor for the reasons we just described, but by linking that cash to specific either a charity payout or specific greenification projects that the company mandates to do then. And that penalty then, rather than being linked to an individual tranche, is often linked to the cumulative CP issued up until that 2 or 3 year target date. I think it's fair to say we're still in an early stage of development of this market, and hence we're quite deliberate not to prescribe one or the other route, because I think both can well make sense, depending on the issuer's overall strategy vis-a-vis the capital markets and the CP markets.
And I guess also, Giovanni, correct me if I'm wrong, there might be financial as well as reputational, but financial implications for the issuer if you miss your targets on a sustainability linked basis, because your cost of funding might increase next time, you might not get the same levels, etc. So there's also something there. Is that what you would expect, Giovanni?
Indeed, I think there is a financial implication that may occur, as we appreciated in 2023, when there was this failure by now to meet the 2023 targets, and it was clearly due to exogenous factors relying to the Russia-Ukraine conflict and the needed, let's say, production from coal power plants that basically what happened was the fact that we were forced to generate our energy out from those coal power plants. And in this context, what happened was the fact that not only bonds, but also we have to publish these, let's say, basically transparently in the context of our reporting what happened. And this implies a potential risk every time when it comes to financial implication tied to the failure to achieve targets, that related cost of funding when you again present yourself to the market, and also credibility to the fact that to the extent that you have to couple these risks with at the same time the ambition of targets you present to investors that cannot be obvious to be met, right?
Geeta, you've been listening in to Giovanni and to Arthur's thoughts on the sustainability linked piece. Do you have anything you'd like to add?
Yeah, I think, firstly, I would say you can see the merits of how NL have aligned their short-term issuances with their longer-term sustainability framework, and that speaks to any type of structure. That's definitely, I think, something that as I mentioned earlier, that I think investors like that transparency and credibility that comes with that. If you're already an experienced player in this space, an established track record is speaks volumes. I think one of the challenges that that we found is that the trade, not only the short-term nature of CP issuance, but also the traceability of ownership can be challenging. You know, these securities are not transacted in the same way that we transact bonds, and you know, the investors are largely focused on liquidity, which means that at times they may need to dispose of those assets for liquidity reasons, not anything to do with you know, the investment itself, or, you know, in terms of the sustainability credentials or the issuer necessarily. So the challenge that comes with that when you have penalty mechanisms and your the nature with which you're holding the investment changes, how do you then apportion that to the underlying investor who was motivated with an intention to be a participant of this journey, but then, you know, for investment objectives is no longer a holder of that. Perhaps they couldn't even roll over the maturity, for example, for liquidity reasons. Yet that doesn't mean to say they don't have an aspiration to support those sustainability ambitions, but you know, they are ultimately focused on other objectives. And I think this is where we found the, you know, the challenge of the sustainability linked from a penalty point of view, and these points that Arthur also articulated. But you know, and I think that's just in addition to the mismatch of longer term objectives and shorter term, which is one of the reasons that you know, I think that we haven't seen as much of a proliferation of sustainability linked issuances generally, because I think it does pose more of a challenge for the issuers to think through the structures and the frameworks with you know, good consideration to meet all objectives.
Yeah, I think it's a good point. And at the start, when I talked about our paper, and I said that we had given observations on the sustainability link piece to allow it to develop a bit further before firming down on it. We are hopeful that, you know, some very clever people like yourselves at the bank side and the issuer side and the investor side will, you know, there will be some kind of mechanism which start to suit everybody, and you know, will then therefore lead to more scaling of the sustainability linked piece. There may have been more programs. We have very much in mind of updating our paper as and when there's been enough development for us to merit doing so. So version 2.0 might have you know, a completely different outlook. Moving away then from the specifics on the use of proceeds and the sustainability linked piece, from a markets point of view, and this is to all of you, Geeta, I'm going to start with you. Where do you see sustainable CP, both parts? Where do you see that going?
Well, in general, I think there's still a lot of engagement in this opportunity, and I'd like to think we're going to continue to see more programs come to market. I think, you know, the paper that's been put together, along with the views of, you know, all the market participants, is hopefully helpful to issuers that might be thinking about where they even begin this journey. It's about creating a sense of uniformity around the thinking of what works and how it may create sort of some longevity in the market. So I'm excited, but I think there are potentially challenges along the way. One of the ones that I think doesn't get talked about too much, but I know it will certainly come up in conversation between an issuer and an investor is sort of the greeniums that are often talked about. Now, if we look to the green bond market, certainly at the very outset, you know, the greenium was a big feature. You had a lot of demand for dedicated green bond funds, and you didn't have enough supply. And Arthur mentioned that, you know, we still are in that phase, even for there aren't enough assets to fund, or projects to fund, I should say. So, you know, for funds that had very specific requirements to invest in green bonds, you know, there was not enough issuance, and so that led to a premium of those bonds. In terms of the money market industry, though, I think it's slightly different, because typically money market investors, as I mentioned earlier, are invested in liquidity and capital preservation first and foremost, and are not necessarily mandated to hold green investments or sustainable investments per se. And that's different because that means that there's a choice to want to hold it. And so if it's more expensive to purchase it, you've got to make that choice actively. But then you've got to be thoughtful that if there aren't other investors who also share the value of those premiums, if you come to selling that investment, what would the secondary bid on that be? Whereas I think it's obvious in the green bond market that there would be green bonds that players that might be a buyer of that in the secondary market. So I think the nature of the money market industry is makes greeniums more challenging, as I say, because sustainable investments in portfolios are not necessarily a requirement. And I think that in itself is a problem for issuers, because obviously there is a lot of work that issuers have to undertake to bring these programs to market. But I personally have been quite encouraged by the increased evolution of programs linked to the sustainability frameworks broadly, because I think that, as I said earlier, does a lot of the heavy lifting for the issuer, and hopefully means that to bring sustainability CP to the market, it's not as expensive for them to do so, and therefore, the greeniums is not such a big feature. And then in terms of programs, I mean, we've seen a mixture of both CP issued through standard programs where there's sort of dual purpose CP issuances, but also some standalone green or sustainable CP programs, and I think that investors are quite open as to as to how those come to market. I don't think that matters so much, but I think it's more the transparency that then comes into play.
Yeah, we'll maybe come back to that point actually. But Giovanni, Arthur, do you have any thoughts about where you see this market going?
If you look at the adoption of sustainable finance technologies in different asset classes, and certainly in the bond market, you've got this S-shaped growth, right? There's some of these sort of early movers, and then it gathers momentum. And that's, of course, our hope here as well, where new programs, improve the liquidity and sort of the size and diversification of the market. That draws in new investors, which hence then triggers more issuers to look at this product. So there's that hope for that sort of self-fulfilling and sort of reinforcing strategy and curve, I should say. As Gita has described, it's not as obvious if it'll be as quick to sort of grow in the CP market compared to the bond market. I think also because I think issuers are a little bit more circumspect today than perhaps they were 5 or 6 years ago about applying ESG labels to financial instruments. Gita's mentioned some of the challenges with sort of the pricing delta, and I think the other one that would be very helpful to resolve, to really trigger this momentum, is around the data infrastructure, as you've described, Katie. It's not been straightforward to sort of assess and segment the portion of the market that is ESG linked. So I think improvements there around data infrastructure is very, very helpful. And it's actually, coming to Gita's point, one of the reasons some issuers have cloned their ECB program, sort of a green and a conventional one, so that when you as an investor buy the underlying tranche, it's very clear if it's green or not, because you've got a sort of pure play program.
Giovanni, anything to add?
Well, just the fact that I think you typically don't proceed with the choice to establish either green or sustainability linked commercial paper program for the sake of achieving financial, say, premium through that. I think in both cases, what drives the need and the will to establish that is, again, to reinforce the message that the company behind that is really focused on sustainability, and therefore I think it will mirror the path of sustainable finance more in general, and sustainable debt instrument as an asset class. And so it will be interesting to see how, let's say, financial instruments and, let's say, both fixed income but also loans will evolve in the next months or so. And I think it will give us a snapshot also on what is going to happen also in the commercial paper space. As hopefully, I think it will be continuously, at least our thought is, an integrated approach, that one that brings value on the table vis-a-vis investors.
Thank you. Now a common thread that I think we've all touched upon at various stages today is the fact that data and transparency is severely lacking. And from a regulatory point of view, like we know elsewhere that on commercial paper, there's a lot of focus on it as a product, not necessarily in sustainability, just commercial paper generally. And there's been a lot of, work done at various regulatory levels, most recently through the NBFI consultation, with proposals on transparency, on harmonization of data sources, on standardization of markets, possibly moving to trading venues, etc. Taking this sort of the data and transparency piece separately, I mean, we've done quite a bit of work on that for CP, and even though there is data, you can pay for it, you can get it. It's not necessarily harmonized, it's not consistent, it's not easily accessible, you have to work for it. And we found then when we were doing the sustainability bit that it was even worse because, as you say, you could have programs which allowed for conventional as well as sustainable. So actually the recommendation in the paper is that it's probably easier to have two separate programs. I know, Geeta, you said you're probably a bit agnostic about that approach. But from an identification and a traceability point of view, the recommendation would be have two separate programs. It's just cleaner, it's easier for everybody. Arthur, what are your thoughts on how this could end, given that there's no kind of impetus to report CP generally? And then, of course, when you overlay the sustainability, and it might be use of proceeds or it might be sustainability linked, what are your thoughts?
So we are, I think, at a stage of the market where, because of greenwashing regulation, because of greater sophistication of market participants, the quality of the underlying data supporting any sustainable finance initiative, and expectations around that have significantly increased, and prospective, ESG CP investors that I speak with do consistently ask this question. If I build a portfolio of a couple of billion in this space, how can I, quickly track, what portion of that is green, is sustainability linked, what real world impact have those investments had? Because I'm going to get the question from my end client and probably from my regulator as well. So I think it's paramount, and my hope is that whether through our task force, whether through other consultations and discussions with sort of the data infrastructure ecosystem, we will get to better tools and solutions here. Because as you said, it is still very manual. At NatWest we have an ESG CP database, but it's still quite a manual spreadsheet to maintain, which is not really at par with those kind of solutions in the bond market and other parts of the sustainable finance universe. And I think our hope has to be with how AI, blockchain, all of these developments are making finance more transparent, more sophisticated. Hopefully there's a use case there as well when it comes to sustainable commercial paper.
Yeah, I mean, it's funny when you look at all the fintech and the technologies and the innovations that we have, and one of the consistent issues we hear on CP generally is the difficulty of even getting ISINs, and the fact that you might wait 24 hours to get an ISIN, and then you might have, because it's domestic, you might have a BE ISIN or a German ISIN or an excess ISIN, and just getting hold of those seems to be such a challenge, which I find extraordinary. It just seems like, how can this be so difficult in this day and age? But anyway, that's another point. Geeta, do you also struggle with the transparency and the availability of data?
Yeah, data is definitely a shortcoming, I think that maybe we end up in a situation that the need for transparency with sustainable finance transactions in the CP market actually helps develop broader benefits for the CP market as a whole, because typically even the sort of standard CP issuance is very difficult to track and find information on. As you say, you may be able to pay for it through different venues, but for somebody who could just go on a platform that provides information on what you could buy, it's very difficult to trace these securities and where they're held. I definitely think that we've been encouraging, at least for those participants in this space, to try and be proactively updating venues with information for these transactions. As I mentioned earlier, if they upload those securities on Bloomberg, if they've got a dedicated program that they label them with the right tags, and I just think it's good practice, and it helps to sort of standardize the approach, and hopefully we move to a place where we do see better data, which I think is just useful for everyone, really, for all concerned.
Okay, we're kind of coming to the end, so I'm just gonna, we've got about 8 minutes left and we may get questions, so I'm just gonna throw one last, I'm just gonna ask each of you to give one final wrap-up remark with respect to what has been achieved so far and what you would hope to be achieved in the near future and what ICMA can do to help. Giovanni, can I start with you?
So I think also listen to Gita. I think relevance of data vis-a-vis investors is crucial, right? To us, I think, and coupled with the concept of credibility that I introduced before, I think sustainable finance can be only, let's say, coupled with an overall sustainability strategy by the issuer. So to the extent that, and also as a provocative approach, to the extent that disclosure in relation to your business model, your sustainability business model, your sustainable approach through your business is well disclosed to investors, I think sustainable finance transactions are credible, but not only sustainable finance transaction, also I think conventional transaction, because investors go beyond the label and identify the real essence of, let's say, the sustainability approach of the issuer, identifying crucial aspects in the disclosure set of the issuer itself. So my recommendation is, I would say, stick to the credibility of your business model, disclose it, provide data to investors, and then as a signaling tool, use sustainable finance to reinforce the message, I would say.
Wise words. Thank you, Giovanni. Gita, can I turn to you?
Yeah, as I said earlier, I'm really encouraged by the growth of issuers in this space. I mean, we've been on this journey here at BlackRock for more than 5 years. So we've been talking to issuers in the CP market for a long time now. And over the time that even this working group has continued to be engaged, we've seen more programs come to market. I think that it would be a great place to be, that it gives investors more choice, potentially to a point where they can have funds that are dedicated to sustainable CP only. I mean, that would be a great thing for those investors that are really motivated to be in that space. But it will require more depth of market. So yeah, just hopefully sharing challenges, sharing information across the industry will really help us all sort of continue to develop this, and maybe that ends up at a point where ICMA is able to sort of even publish more firm guidance at some point in the future.
Arthur.
For me, the point I wanted to add as well is that this has been a roughly two-year journey, I think, for this task force, and having now gotten ICMA endorsed paper on this asset class, I think adds a lot of authority, a lot of clout, and a very helpful benchmark to conversations that are being had with prospective issuers, with prospective investors, in a way that was a little bit more anarchic, I guess, in the prior years. So I think it's a really helpful milestone for this market. And as you say, we'll continue to evolve the paper as we see best practices develop. And building on Giovanni's point, I think it's doing this right is about congruency. Making sure that the issuance and approach is congruent with your wider sustainability strategy, but indeed also with your wider treasury strategy and how you would utilize money markets and commercial paper generally. So I think that's an important point.
Thank you, and I'd like to thank you for your words about the paper, Arthur. And I'd like to thank each of you actually, because you were all very, very much involved in leading us to where we got to, and your dedication has was astounding. And again, as we said, we will be. It's work in progress, right? It will be updated at some stage to version 2.0. Now we've only had one question in. If anybody else wants to send in a question, you've got a couple of minutes to do so. But the question is, this is somebody from Ghana. Where do we begin to incorporate sustainable finance into our existing CP market? Ghana has a green bond market and a CP market. Although both are regulated by the Ghana Stock Exchange, what steps can we take to fuse the two? Don't know who'd like to take that.
I'm happy to give some thoughts in terms of how to get traction from an investor side. I think that, perhaps speaking to the investors in CP market itself will help understand what types of, motivations there are and objectives there are in terms of, developing a sustainable CP market. I think it's a journey. If I think back to the years prior, and Arthur did describe it as certainly, well, let's say it was slightly chaotic and less refined as it is today, streamlined as it is today. But we have to start somewhere, and I think that starts from conversations around, well, why would an investor buy a sustainable CP? How would an issuer structure? How would the dealer interact in that marketplace as well, to support that issuance? And I think having those conversations is a starting point for this. I don't think there is a very clear set of rules around this yet, but hopefully from the call today, in terms of a lot of the points made by all of us here around what good looks like, the types of challenges, but also how some of those have been overcome, might be helpful as well in formulating that.
I think that's right. It's about identifying the early movers, both on the issuer side and on the investor side, and then leveraging the experience from the European and other markets over the past 5+ years as case studies, as lessons learned.
And of course, manifesting best in class by actually, looking at the guidance that we have that we've all spent quite some time putting together, which is definitely the consensus drawn in the Euro CP market anyway. We've actually just got one more question. We've got 1 minute. Do you see automation as a huge factor for increased transparency? Arthur's nodding. Do you want to take that, or Giovanni?
Well, actually, I think I don't think it's automatically yes the answer, in the sense that you have to make your hands dirty when you have to deal with the transparency, in the sense that you have to engage a whole company to, let's say, provide data and consolidate it. And I think then the step to automation here is if well done, clearly could be valuable, but it for sure it is requiring great efforts in order to provide data which are consistent between different departments and vis-a-vis the market. I don't know if Arthur or Gita agrees with that.
Absolutely, no. It's controlled automation, like you say, making sure there's guardrails there. But we've spoken about that information chain, right, from projects through to treasury, through to the investors, and how to get that to work in an optimal way in the CP market. And I think there's automation, there's a role, I think, for AI, for other sort of innovation as well to support that.
Okay, well, look, what about that? It's 11:01. It's just turned 11:01. We're 1 minute over. Thank you so much, Geeta. Thank you, Arthur. Thank you, Giovanni. I hope that our audience found this useful today. If there are any further questions to come out of this, you can always contact me and I can direct them elsewhere if necessary. And wishing you a great rest of day and a peaceful seasonal break to everybody, well deserved. And I hope that the race to the end of the year goes well for you and you all win. Thank you very much, everybody.
Thank you for your kind words.
Thank
Best
you.
wishes.
Thank you.